morning everybody, Pope Binary here, and today I've got another video lesson for you guys over the topic of double bottoms and double tops. And I'm going to be honest with you, these are my very favorite candle formations. They, when they work significantly, meaning there's generally a large move afterwards, and they work generally a high percentage of the time, right? And so moving forward, I'm trying to pick a handful of patterns, one or two or maybe even three patterns that I'm just going to master for this New Year's. And double tops are definitely on that list, like 100%. They are my favorite pattern, and today I'm going to do my very best to teach you what I've learned over the past year and a half or so trading this pattern. So before we jump in, here's the quote of the day. If you're trading reversals, second entries are the very best kinds of entries, and that's from the famous price action trader Al Brooks. So without further ado, here are double tops and double bottoms. Alright everybody, as always, whenever I've got one of these video lessons, I whip out the good old PowerPoint here, and basically what I'm going to do to start here is we're just going to jump in. What is a double top and a double bottom? Right? They're the same thing but flipped, right? So a double top occurs whenever, in this bullish market, say we had a bullish market, it reached a major resistance point. We see an initial rebound. We come back up to the resistance point, and then we see a second rebound, and generally that is the second top, right? That's the second entry. That's the second significant factor that tells you we're going to fall away. Right? Because that's essentially just telling you that the market is going to hold at this resistance line and respect it and not break it. And likewise, it's the same thing inverted, right? For a bear market, right? It's the same thing. We come down to a support line this time, right? We get a bounce, we get an initial bounce, we come back down to the exact same support line, and we ricochet off, and that's a strong signal that the market is generally going to continue in that direction. It's very straightforward, right? It's very simple, but it's a very effective pattern. And so what I want you guys to know is I want you to make sure you understand why this pattern works, okay? A lot of traders, I did this in the beginning too, you hear things like double tops, double bottoms, engulfing candles, pin candles, right? You know they work, but you don't understand the reasoning behind why they work. And it's very straightforward, in my opinion, why a double top and a double bottom works, right? So I just want you to imagine, like, human nature. If you see, let's just imagine you see, I don't know, I'm just spitballing here. Let's say you see your neighbor pull out of the driveway at 8 a.m., right? He does that once. Tomorrow, what do you think he's going to do? You think he's going to pull out of the neighborhood at 8 a.m., right? It's the same thing with the markets. That's a very mediocre example at best. I'm sorry, I'm spitballing here. But you know what I mean. Human nature, we love to recognize patterns, right? This third bullet point here. Whenever we see something happen one time, we want to see it happen a second time, right? That's generally what it is. And especially, and I get into this later, you want to wait for these patterns to occur at support and resistance zones. So if it occurs at a resistance zone, that tells you, say you had a hypothetical bull market, right, and we hit a resistance zone, that tells you that A, in the past, this resistance line would have been respected. Let me get a visual aid for you guys, right? So we would have said that, in the past, this resistance line would have already been drawn, right? So this is already a pattern, right? We already see a pattern of people respecting this line. And then in a very short period of time, right, over a course of 3, 4, 5, 6, 7 candles, we see the market respect the line again. That's just alarms are going off in people's heads, Oh my gosh, this line's being respected again. Sell, 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 sell. And consequently, you generally get a large move to the downside, right? I hope that made sense to y'all. I hope y'all can understand the psychology here. It really does help you as a trader if you understand why the patterns work. And as I just mentioned, I get a little cheesy in this slide, but this pattern has to occur at support or resistance. No if, and, or buts. You cannot trade this in the middle of nowhere, right? You have to trade this at a support and resistance. And I know the reason I put pesky support and resistance, a lot of traders, especially a lot of new traders, you hate the concept of support and resistance. They're hard to identify. They're really not. I've got a video about this. Check it out. But, they're hard to identify. I don't know what the right type of reaction is. I don't know what a support and resistance zone is. They're very simple. It's just where markets turn around. If you see a double top or double bottom form, just make sure it's at a point in the market where the market has turned around before, right? It's that simple, right? And so as I get, a little goofy in these last four bullet points here, you have to trade these at support and resistance. I've lost so much money in the past. And the reason I started this YouTube channel was not to, milk you guys for money. It's to, get a community of traders moving towards the right direction, and that is being consistently profitable, right? So just trade these at support and resistance. Please, please trust me here. I mean, if you guys get two things out of this video, it's that A, double tops and double bottoms work, and B, you have to trade them at support and resistance. That's the two big takeaways I want you guys to learn here, right? And so, like I generally do, that's the pattern, or like I generally teach, rather. I taught you, that's the pattern that I just taught you, and now I'm going to further teach you how to further increase your win rate. And so, here goes, right? So, if you really want to see success with double tops and double bottoms, you need to see an additional candlestick formation or a candlestick pattern or whatever. That this first bullet point, apologies for the wording here, a candle formation inside the formation. That's very vague. What I meant to say there is you want to see a candlestick pattern happen inside the double top or double bottom formation, right? So for example, if you saw a pin candle forming on the second top or the second bottom, right? That dramatically increases your win rate. I mean, I cannot stress that enough. Your win rate, I don't have the numbers here, but I'm just going to tell you from experience, it dramatically increases your win rate, right? And so, like I said, vanilla double tops and bottoms, while they do work, if you trade a pattern inside a pattern, they work significantly better, right? So, an example of this, right? As I said in this last slide in this double bullet, or the second bullet point, if you see a pin candle forming at the second top, say we saw a double top formation. If you saw this setup, right, that is a fantastic setup. I mean, I cannot stress to you enough. If you ever see this setup at a major support or resistance zone, take it immediately, right? And so this trade occurred yesterday on the pound versus US dollar, right? And as we can see, I got a nice 5-minute win. I did not take an hourly expiration here. This is on 5-minute charts, by the way. After I saw this pin candle form bouncing, first we can see the market turn around at this black line, right? We see bullish market come up, turn around. I see, the market come up, bounce off a major pivot zone, which I had previously identified, right? We see the market come up, bounce off that, and then it closed below where a second pivot zone happened, right, which was right here at this first market turnaround. I hope you guys can see that. So basically, this giant pin candle bounced off a pivot zone and finished off the first this first black line here. I got a nice out of the money 5-minute contract win there. That is such a strong pattern. And I think I've got the equivalent here. I've got a double bottom pattern. So we can see, we've got a bullish market. We get a bearish, a very strong bearish rally down here to a major resistance line. We get a bounce off. We come back up. We come back down. Retest it. We get a pin candle followed by a bullish confirmation candle, and we were off to the races, folks. You see how large a move this is? This is a double bottom pattern with this here pin candle. While this is not the best pin candle, if you've seen my pin reversal strategy video, if you haven't, go check it out. But in it, I mentioned I look for a green candlestick if it's a red move, right? But this is not the best example, but it's still applicable to teaching you guys, right? And so another pattern inside a pattern, right? If you guys can't tell, essentially, 2 slides ago, all I'm doing is, this is the same. I'm just taking a double top and replacing it with different candle formations. So as we can see here, instead of a pin candle here, we've got an inverted hammer, or not just a regular hammer, pardon me, whatever it's called. If you see this type candle followed by a bearish candle, know that the market is going to fall. All this terminology, just know if you see this pattern, the market's going to fall. And I got a good example here. This one happened about a couple weeks ago. I've been trying to record examples for you guys, but we can see, we get a nice pivot off this value, market comes back, retests this value, hammer, followed by a bearish confirmation candle, market fell away, right? Clean trade. This was on the 1 minute charts, right? I trade 1 minute charts and 5 minute charts primarily. And so double tops and double bottoms, obviously they work across all time frames. And so that's another little lesson for you guys. But as we can see, hammer followed by bearish confirmation, it works. I'm putting my money where my mouth is. These are trades I actually took. And you know that because I recorded these trades, right? If I had lost money, I wouldn't have recorded the trades, obviously. That's a joke. That's a joke. You need to record your losers and learn from them too. Right? All right, so we got another example, and this is just an engulfing candlestick happening at a double top or double bottom. We got a nice clean example here. Market comes up to a major resistance point. And this is a bonus. There's actually I hope you guys can see this, but there's two double tops in here. First, we've got a short-term double top, right? We see market come up. This is a major resistance line, bounces off. We see another bullish rally up to it, and then we get a nice large pin candle right here. Market fell away. That's a good for a 5-minute scalp. Now, if you want the big hourly expirations, you want to wait for big engulfing candles like this. Market came back up to the same value. Huge engulfing candle bouncing off it. Market just fell like a rock for the next hour, right? So that's a great, like I said, engulfing candlesticks work inside these patterns. And then I don't believe I have a real world application of this, but this is essentially the same thing. If you see a very small doji candlestick followed by a bearish confirmation, that's a strong signal that the market's about to turn. I don't have a real world example for this, but just know that that pattern works as well. Right, so that's the patterns inside the patterns. I hope you guys, were able to follow along there. Just adding patterns inside of other patterns is a great way to increase your win rate. So if you're looking to further increase your win rate, here are things you can do. First, I want you guys to know leaving space in between the tops and the bottoms of the double tops and double bottoms formations. And right, as we can see in the first bullet point, if the candles are on top of each other, that is more a sign of indecision, right? So if we look at this example, how I said, there's kind of sort of two double tops here. This is not a great double top, right? This first double top here, I hope you guys can see my mouse circling it. When you leave space, right, you see how right here there's, a series of about a dozen candles before we retest this double top. That leaves enough space to warrant a strong reaction to happen, right? We left space, and likewise we get a strong reaction, right? So what I'm basically is just saying is, leave enough space in between it, right? So another thing you can do is you can try adding divergence with indicators. For example, if you have stochastics, if you use relative strength index, things like that. And if you don't know what divergence is, that's essentially if you see the market move up, but one of your indicators is telling you that the market should be going down, that's divergence. It's basically where just two things are telling you opposite things. That's a strong signal that, the market's about to fall. So if we take, this example, if the market, if we were making a higher high, say you had a relative strength index down here, right? If the market, if the market was coming back up, but the relative strength index was going down, that's a great symbol that the market's about to fall. So that's just divergence. If you don't know what that is, I'll probably be making a video on that soon. It's a great trading tool. And so the last thing you can do to further increase your win rate is you want to wait for the market to be significantly away from the moving average, right? Whenever the market, I want you to think about this logically, and I'm trying to help you understand the reasoning behind moving averages. Moving averages, it's exactly what it is. It's the average that the market is staying around, right? If the market moves significantly away from the average, that means a sudden, very volatile move has happened in the market. And that means, the rubber band effect, as I like to call it, is about to kick in. If the market moves really rapidly away from the average, then you're going to get a very rapid reaction back to the average, if that makes sense, right? And so that's all you really need to know about the moving average is if the market gets significantly away from the moving average, it's a good sign that you're going to get a strong reaction to move back to the moving average, right? And so I think that's the end of the lesson. I have a couple videos that I recorded about a month back. Uh, I'm going to be honest. This is videos kind of been in the works for a long time. I've really been trying to define what a double top bottom is, and I'm trying to make sure you can. I've been trading this a lot, and I'm making sure that I'm making money off this pattern. I'm not just teaching you, not putting the money where my mouth is. Right. A couple of things I want you guys to know about these examples. These aren't the best examples. I'm going to be honest with you. These are mediocre setups at best, but it's just to prove to you, the power of double tops and double bottoms, right? So I guess this is where, the so-called live Pope binary is about to exit away from the video and just play some pre-recorded clips. So if you found anything in this video useful, please like, comment, and subscribe. It really does mean a lot, and I really do hope y'all learned something from this and use this in your trading. Like I said, this is my favorite pattern. It works out such a large percentage of the time. So I hope you guys enjoyed, and I'll catch you on the next one. Hey guys, so I figured I'd record a few live examples for you of what a double bottom looks like. So as we can see here on USJPY, this is live. As we can see, that it's still ticking right now. This isn't pre-recorded or anything. The market, we've been in a downtrend for the longest time, and we finally hit a resistance, or a support rather, that the market is respecting. And so we had a long period of, it hit the resistance, then it bounced up, came back down, hit the resistance, it was choppy for a bit, and then this first big green candle was the market saying, okay, now let's try going the other direction for a little bit. And so what I did is I got a contract in at this value right here, the 117.01. This is an in the money contract, obviously, but I said basically by the time this 5-minute expires, the market will stay above this support line. Hey guys, here's the update. Like I said, this is just a real clean example. In my 5-minute trade, we can see over here the market kind of just hovered around this value, hit a little resistance before the market just absolutely took off. Okay guys, got another example for you. Now, I don't know if you can see it, but this is kind of a range trading, not necessarily a double bottom, but it's the same principle, right? So we can see there was a bear market. The market pivoted off of this value, which is what this red line right here represents. This is a support line, right? So the market pivoted off. We can see it hit a nice range up here. We came all the way back down to this value. The market came down, bounced off, and then this one candle right here went all the way down, bounced off, and so I said the market is going to rise, and I'll show you how it turns out. All right, guys, as we can see down here, we're about 15 seconds past the close of the period, and like I said, the market, it didn't really take off like I'd like to see it. It's hitting some resistance here, and generally this is something I want to point out. If it hits resistance like that, that's most likely means the market is actually going to come back down and test this value again. Hey guys, I lied. I'm actually back. This is not a live example. I'm sorry, but I just could not help myself. I think this is a godsend. I just pulled up my charts because I was going to add a little thing at the end here to tell y'all, but I just stumbled across this excellent example of a double top. Right, so this is literally the same exact pattern is one of the examples I showed y'all earlier. This is the same exact pattern, right? We can see, we had a bullish market. We came up here, we pulled back, we came back up, we came back up to the same exact value. We get a nice pin candle, and we got a nice scalp move, right? So this was a good scalp on the 5-minute charts, right? Then we come back up, retest the value, and notice how I said earlier you want to leave space in between the peaks or whatever, the tops and the bottoms. Once you leave space, we got a hammer followed by a bearish confirmation, and that is a good signal that the market was about to fall away. And as we can see, the market just plummeted at this point. And I don't. For whatever reason, the resistance line isn't showing up, but this was a daily high, so this is a major resistance line, So this was a very, very good trade, and, this is just a hammer plus that bearish confirmation, that pattern inside the pattern that I like to teach. All right, so the real reason I came back and I wanted to, come back to being live Pope binary here is I want you guys, if you have any recommendations for future videos, please let me know and drop a comment or send me a message on YouTube or email me at Pope binary. Just let me know. I'm going to be honest, I've got a few more video ideas, but at this point I'm just going to start recording a whole bunch of live trades because I don't know, I can't think of anything else to teach y'all because this is how I trade. But if you want any input on, like, questions you have, I'll be happy to make a video and explain that to you. If it's, a question worth making a video over, if it's, hey, Pope Binary, how can I make $800 in a week? That's not going to happen. Sorry, I cannot make a video over that. But, I will do my best to answer any questions you have that are legitimate questions. So, like I said, if you have any ideas, drop them in the comment section, and I'll catch you on the next one.